Next, the market-to-market report.
Sales to China and predictions of bad weather in the U.S. move the commodity markets slightly higher. For the week, July wheat gained 6 cents and the nearby corn contract improved a penny. Pressure by the Trump administration on China to live up to the Phase 1 deal and threats of freezing weather helped move the July soybean contract higher by a cent. July soybean meal weakened $1.70 per ton. July cotton increased 43 cents per hundredweight. In the dairy parlor, June Class 3 milk futures rallied $1.53. Another volatile week in the livestock sector. June cattle jumped $7.40. August feeders put on $9.30, and the June lean hog contract declined $1. In the currency markets, the U.S. dollar index declined 133 ticks, actually make that 71 ticks. June crude skyrocketed higher by 27% or $5.14 per barrel. COMEX gold gained $1.60 per ounce. And the Goldman Sachs commodity index added 19 points to finish at 269.90. Joining us now to give us some insight is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hey, Paul. Thanks for having me.
Good to see you, even though it is afar. I know you'd like to be here, and I know you'd like to start moving around. We'll talk about what life is like in Chicago in Market Plus, but I want to start today in the wheat market. Weather was the story a week ago. Weather might be a story this week, corn and soybeans for what's been planted, but what's keeping the lid on any rallies here? Is it the strong dollar, or is it that nobody wants to buy U.S. wheat right now?
You know, sort of all of the above, but also look at the relative strength that we've seen in the wheat prices compared to the row crops. You know, I mean, do we really need to see wheat that much higher from where we are right now? The weather story really at this point might almost be more on the spring wheat because, yes, we're really far behind planting. And with the cold temperatures and the rain, everything we've got going on up in the Dakotas, we're going to struggle to see that winter or that spring wheat crop advance. We could also see some damage on the winter wheat crop as well. So I think Monday is going to be an interesting day for wheat. Yes, we've got weather for all different kinds of things going on. And personally, you know, look, I think wheat's at a very value area right now. And if we look at Kansas City wheat trading in a very tight range over the past week and a half, I think that's because we've kind of found an area where everything really kind of makes sense here. We've seen a bit of a correction in the spread between Kansas City and Chicago. But in my mind, Minneapolis is the one that has the game across the board.
Okay. Real quick, are you making any sales or are you holding right now on wheat? Any contract?
Mark, we're looking at Chicago. I think we can bounce back up towards the higher end of the range before I get too aggressive on making sales. Kansas City, I like selling here or slightly higher around the 487 level or so. Minneapolis, I'm looking for higher prices.
Okay.
I'd like to see a 15 to 20 cent bounce there.
All right, we talked about weather just a little bit. We've got a whole bunch of corn in the ground. It's moving at a ridiculously fast pace. Perfect conditions for some, but yet east of you, they're still trying to get something in the ground. There's a mix going on right there. What's the major player in this market? Because you also have oil that rallied a bunch.
Yeah, as far as planting is concerned, we are off to a really fast pace of planting. However, it is more centered on the west side of the corn belt than the east side, which might actually be a good thing for this weekend where we're looking for some very cold temperatures on the eastern half of the corn belt. So it actually kind of works out. That being said, when we talk about fast pace of planting, we have to talk about acreage. Generally speaking, when we see this fast pace of planting, we usually get very close to the USDA's planting intentions number, 97 million acres of corn. That's a lot of corn. Honestly, I don't think we're going to get 180.5 combined acres in the row crops. I just don't think this is the right climate to see that, especially with, I think, the amount of PP acres that are going to happen in the Dakotas and up north. But you have to imagine that we're going to see a lot of corn acres, maybe more than we need. So that is a bit of a problem there. As far as the biggest feature for the corn market, wow, there's a lot of things going on. We've got China buying, we've got coronavirus, we've got just ethanol issues. Across the board, there's a lot of different things. But I think right now, we factored in a lot of the negative news. Generally speaking, when we get between 40 and 60% planted in corn, seasonally, we start to see a bit of a bounce. You look at the board, the spreads are looking good. The chart looks like a classic cup and saucer formation, which is a bullish feature for a chart. I think we're due for a bit of a bounce. But with the USDA report coming up on Tuesday, it could be a big bearish number. So
Hold
we're a
that
little bit worried
thought.
about that.
Hold that for just a moment, because I want to ask Mark in Nebraska's question that he submitted to via Twitter, which is at Market to Market is how you can find it. Mark's asking, how likely is that USDA will report even more corn acres when planting is done?
Yeah, see, great question, Mark. You're not the only one thinking that. I don't think we're going to see that. As I said, 180.5 combined row crop acres would be a record number. I don't think this is the climate for us to be planting record acres for row crops. I don't think wheat acres are going to decline anymore because, relatively speaking, the prices are really good. I think that, though, at one point I thought maybe our corn acres would be as low as like 93, 94. But with the fast pace of planting that we've got going on right now, I'm thinking more like 95, 96. More than 97, I just don't see that. Yes, we are planting corn very fast, but I don't see over 97 million acres.
So what would that be? So say it does go above 97 million. Is that a bullish signal then, or is it a bearish signal?
Oh, it'd be really bearish.
I would think it would be bearish. Yeah.
97 million acres of corn. Look, you look at the trade estimates for our carryover for the USDA report that we see on Tuesday is the first look that we get at the USDA's WASDE balance sheet of next year's production and carryover, everything like that. So the new crop balance sheet for the first time we will see on Tuesday.
Okay.
The average trade guess is for about a 3.4 billion bushel carryover for corn. That's at 97 million acres. If you see that go higher than that, we're going to have to start adding more to that ending stock number. And it just becomes really burdensome at that point. So we really don't want more than 97 million acres of corn unless we have a major weather catastrophe this year.
All right, let's talk about what it impacts on the soybean market. There's the thought that you talked about China buying some U.S. corn. Is that pulling soybeans along, or what's playing here?
You know, this week we saw, towards the end of the week, Thursday night into Friday, we saw some better indications that the trade deal might be getting back on track. We had our trade delegation talking to their trade delegation late Thursday night. Apparently those talks went well. We don't really know for sure. We didn't hear the details that much. But it sounds like China wants to fulfill that phase one trade deal. And that means they really got to get going very soon. So, yes, the soybean market really wants to embrace that, wants to believe that. But, you know, again, we've got a lot of doubters out there. We've had a lot of doubters since that has been signed, and for good reason. So we need to see the sales start to happen. But if they do, yes, it could be really very bullish soybeans. We don't have that big of a carryover going into the end of this marketing year. But if you look to next year, even if we do get the 83.5 million acres planted, which I'm not so sure we will because of the fast pace of corn planting, we could have a fairly tight balance sheet for next year. And if China starts buying aggressively, we could really have a story in soybeans.
And then we have to start looking at crush, although there was a report this week about that. We're going to have to move on. I've got to get to these livestock markets, Ted, because cattle, you've got processing that started back up. You saw here earlier in this broadcast, you have a jump for cattle of $7. That's 8.5%. Does this thing have more upside to go?
Yeah, in the longer term, yes. In the short term, I'm not so sure. Yeah, we are getting these facilities back online sort of slowly. And a lot of this is coming from comments that have been made by Sonny Perdue and Trump, echoing the same comments that we're going to be up and running in the next 7 to 10 days. I don't know about that. I think we will be up and running more so than what we are right now. But with the distancing that we're going to have to do, there's going to be a lot of changes that have to be made to these facilities. That's going to take some time. The profit margins that are being offered to packers right now eventually will get us to and maybe even above last year's production numbers, but it might take some time. Now, that being said, cash is getting stronger, like you said. I think the board will start to lead the way. I wouldn't be surprised to see a bit of a pullback, after the 3 limit up days that we saw Wednesday, Thursday, Friday. Friday's close was disappointing, to say the least. Could start off the week under a little bit of pressure. But over time, I look at December cattle, I could see us trading 120. And it's a long way up from where we're at right now.
Well, and the feeder issue gets to be a discussion of if you're holding them in the lot, if August, it's kind of, are you buying cash right now? Or are you buying the futures when it comes to feeders? That's a tough decision.
Yeah. No, we're trading in discounts cash. I like the futures better. I think the futures have more potentials because, again, we don't trade todays, we trade futures. And where do we see the potential for things to be good again? It's in the future. When we get further on into the end of the summer, into fall, it's not the immediate term. We know that demand is really good right now, but we can't satisfy that demand because we don't have the processing capabilities at the moment. I like the futures.
You do. All right. Well, we had a little bit of movement in some lots in Texas and Kansas, some activity in the auctions there. Are you hearing the same thing?
Oh, yeah. It's been all over the place this week. And, a lot of producers are crying foul because of the Packers margins that we have and the huge, huge volatility that we're seeing in the cash market. But look, this is a function of the times that we're having right now. You can see mainstream media reporting on this every day. That doesn't happen. We don't talk about needs on a lot of these, new business news television things. But this is what is being talked about all day, every day. And it really depends on where you're at. It really depends on what plants are up and running on that specific day. And the volatility is really off the charts. So, yeah, cash candle is a very difficult thing to get a good indication on because it's a day-to-day thing. Again, we trade futures, not today's. I think the market itself, the board itself, is going to give us a better indication of what the optimism is and what we think is going to happen, and where price direction is going to go.
All right, last few seconds. The hog market, they could be the lowest processing speed in a decade. This had rallied going into the last couple of days, and now we've tabled off. Where are we going, up or down?
Well, we had gotten overbought, and I think we needed to pull back. And I'm focusing on December hogs, and we pulled back right to where support was there on Friday. I think we find that support, and I think we bounce back. Over time, I think hogs are going higher.
Okay. All right, Ted, we'll ask you about cotton. We have a lot of questions, and I think you've got some props there that we're going to see. So if that's not a tease to get you to watch Market Plus, I don't know what is. All right.
Yeah, lots of props, but always.
Ted Seifried, thank you so much. That does wrap up the broadcast portion of Market to Market, but there is still so much more to talk about. We'll cover that in Market Plus, where we'll answer your questions. You can find that segment on our website at markettomarket.org. Facebook allows you to keep track of your favorites from rural America. You'll find behind-the-scenes pictures and a few stories on our feed. We still have that great story of racing tractors, the Audubon 250. You got to check that out. Find us at Market to Market Show. Join us again next week when we'll explore the effects of the finding labor during this COVID-19 pandemic. Thank you so very much for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.